From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 21st, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the major U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we can look for entry and exit opportunities. First off, noting on the news calendar for the day here on Monday, March 21st, nothing really significant on the news calendar. Everything's listed as low to medium impact. No high impact pieces of news listed for this first day of the week. Okay, let's move on over here to the USDCHF, the US dollar versus the Swiss Franc. Over the past couple of weeks, we've seen a pretty significant fall off on this currency pair. We were in a little bit of a rise, period of congestion here, capping out about the parity level 1.0. A couple of weeks ago, we saw the challenge higher and moving all the way up into the 1.0090 level. And then since then, it's been in a free fall, coming back down, a little bit of a rally here in the middle of the fall, and now we've tested a new low late last week. Coming back down here into the mid 9600s. Interesting here, the blue shaded area that we're seeing here on the chart in the middle of the chart, holding as our support now, but we've seen it as support here before several weeks ago as the market challenged here into the upper 96s. It found support and went back up again. Now we're right into that same area. Follow it back in time, we could see some historical congestion, support and resistance back here. Nothing really significant sticks out other than that last low that we see right here. Fibonacci from the lowest low of the blue trend line here, the low blue trend line, down here into the 9400s. Fibonacci from that low all the way up to the highest high on the chart, interesting enough, puts the 786 Fibonacci retracement level right here in the middle of our blue shaded area. Let's zoom it in one time. There you go. That lowest low to highest high on the chart, you can see that 786 right there in the middle of the blue shaded area. So we know that there's Fibonacci support here. 886, the next Fibonacci level lower, is down here at the green shaded area. The yellow shaded area, 2 days now, finding resistance at the yellow shaded area. And so today, nothing different here. We're finding resistance there. If we're going to see reversal for this currency pair, reversal to go back up, I should say, then we need it to break back above that yellow zone. As long as it's underneath there, I expect, at least for the day today, we're looking at this as resistance and the opportunity to trade in the direction of our recent momentum over the past couple of weeks as a sell would be there close to the 97.15, 97.50 level in the yellow shaded area. Now, I'd be very discouraged about going short and selling close to the lowest low, the blue shaded area, in that 786 fib that we just pointed out. That is support for the day today. So as we look at it for the day today, we know where resistance is. We know where our support is. If we're looking for any type of longer term trending action, one of those two levels is going to have to be breached or broken. It's either going to have to break above the yellow zone to go higher or below the blue zone to go lower here for the US franc. Zoom it on down to the 4-hour time frame. Doesn't really change it at all, just gives us a little bit of a zoomed in view on the currency pair. We can see it's a little bit of a rise coming up here, just like what we saw between the orange and purple shaded area, by the way, up here. So that should give us a clue. We saw the rise into the purple zone and then the new fall. As it rises into the yellow zone, that produces a possible selling opportunity here for the US franc for the day today. It's already been there once today. I'd be cautious about going short at the current moment because we've already come off of those highs close to the 97.15 level. But definitely the spot that I would consider if you're looking to go short. If you're considering going long and looking for some reversal to go back up, the blue zone becomes your very best opportunity for the day on the US franc. Moving on over to the euro dollar. Here's something interesting. We're on the weekly time frame. We've studied this in the live trade room over the past several weeks. We're looking about a little bit more than a year's worth of time. We're looking back to January of 2015. This red box, this is the weekly time frame, and I don't want you to lose sight of that. Weekly time frame, long term. We're back to the beginning of 2015. We've continued to find resistance close to the 114 level. Take a look at that, the top of that red box. I only point that out because that's where we are now. we're underneath that resistance. So I'd be very discouraged about going long the closer you get towards the 114 level, even into the upper 113s. Take it down to the daily time frame. You can see where that red box is. You see the green shaded area. You can see the last resistance that we see there. So the closer you get to 114, I know we'll be looking for resistance. And really, if we're going to see it continue higher, it will need to have a breakout above their open and close on the larger time frames will give me confidence that it's going to continue to pressure higher. Otherwise, underneath, even 113.65, 114, I think we're looking for resistance. Now that's a few pips away still. We're looking at 100 pips higher before it touches that green shaded area. So this orange zone today, highly important for the day on the euro dollar. 4-hour time frame, take a look at this. Similar to what we saw on the US franc, but just the opposite. We see the fall here into the purple zone and the rally. Fall now into the orange zone. So this orange zone, highly important for the day today. Within or above it, we look for continuation of the uptrend. Anything underneath here, and I would call the bottom of this 112.65. 112.60, 112.65, that's the bottom of the orange zone. Breaking there, we maybe look for it to begin pushing back lower again. Back above 113, we'll look for the continuation to the top of our range, which is back up here towards the upper 130 and towards the 114 level. Taking Fibonacci here, I don't think will be too much of a bonus here, but I do know that if you were to take a trend line, just connecting, let's say this low here and these lows here, we are above that trend line, and you can see that if it's going to go lower, it will need to break through that trend line, the bottom of the 112.60 or so level. If it gets underneath 112.60, I think you're probably looking for this to head back down to 112, the yellow shaded area, as the next area of support for the euro dollar. Moving on to the GBP USD, Great British Pound versus the US dollar, we've been studying somewhat of an uptrend channel here, this green trend line, red trend line, and it's been floating around inside that channel for quite a while now. The moving average here is a 100 period moving average, just above the current market. Hasn't quite reached all the way to that moving average. We've also been studying this black box over here and how the market bounced around in there for several days. Back here in the black box, bounced around, finally broke underneath it, started going lower. We're in that same area, the blue and the orange shaded area now. Take it on down to the 4-hour time frame. Similar looking to the euro dollar maybe. We can see support here at the 143.90 level. There's resistance back here. So this resistance giving us a clue to support right now into this same area right around the 143.90 level. Staying above here, potentially moves back higher again and challenges the highs all the way back up into the 145s again. Underneath this blue shaded area, maybe getting a little bit of a further reversal back down, at least to this green shaded area, which is down into the 142.60s. I don't think I would go short right now because we're sitting on top of that resistance high. Sitting on top of that high gives us a clue to support right around the 143.90 or so level. Open and close underneath here may produce some reversal back down towards the 42.60s or so, down towards the green zone. So if you're looking to go short, I think that's what you're looking for, the breakdown of 43.90 or so. If you're looking to go long, you're probably at your very best opportunity for the intraday to do that. Be cautious on the breakdown of 43.90 if you do decide to go long here for the pound dollar. Moving on over to the USDCAD, of course, it's been in a downtrend for quite a long time. We've been watching oil prices as well. As soon as oil prices start to go back down is when we'll likely start to see the US CAD starting to move back higher again. As long as we see oil prices rising, we'll look for this to continue to move down. If oil prices start to go again back down, we'll start to look for this to go back up. So again, inverse correlation with oil prices is what we've been watching in the live trade room. We have this red trend line representing our current downtrend that we've been in. We're a little ways away from matching into that red trend line, but definitely some areas that we'll want to pay attention to. 4-hour time frame. Here on the blue shaded area, you can see that is 1.3050 to 3085, currently holding as your resistance. If it can break above that blue zone, we'll call it 3085. We will likely look for a little bit of further reversal here for this currency pair, and I think it wouldn't be out of the question to see it back towards the red trend line and into the mid 1.3200s. Back underneath the pink shaded area, clearly that is your current support. Back underneath there, we start to look for it to go down. If you're looking for selling opportunities, at least for the intraday today, this blue zone may be an opportunity. Be cautious, though, on the break back above 3085 if you decide to go short targeting the pink zone or lower. Be cautious on reversal here for the US CAD. Moving on over to the US yen, we've been studying this range, this area of congestion for quite a number of weeks here. Finally, last week we saw the push underneath and the breakout, the open and close underneath it. Just like late last week, if you were in the live trade room, we were talking about potential selling opportunities on any rallies into resistance close to the 112 level. I think that'll be still the name of the game for the day today and this early part of the week. As long as it's underneath 112, this green shaded area, these last supports here, I think that becomes our selling opportunity close to the 112 level, the green shaded area. Otherwise, a breakdown of the blue zone becomes the continuation of the downtrend. So if you're a seller here for the US yen, you either want to go back up to the green zone or break underneath the blue zone. Blue zone clearly holding as your current support here for the US yen. That blue zone sits right between 111.30 and 111.0. Break underneath it, goes lower, staying above it. We're currently finding support. Challenge back to the 112 level. Up to the 4-hour time frame. Look at what's happened here along this blue zone for the past several hours. I do think that we are at support. Terrible place to go short. You would want it to go up before it goes down. That's really the name of the game here for the US yen. It needs to go up before it goes down. Don't sell it on top of the blue shaded area. It needs to break through it or rally back into resistance. If you're looking to take a little bit more aggressive stance, it's possible that you could be looking to go long here towards 111.30, targeting the green zone. Just know your risk is a breakdown of the blue zone and continuation of the downward slide. Moving on over to the AUD/USD, it's an uptrend. That's the direction you should be focusing your efforts on here for the Australian dollar, as long as it's above our support zone, which is the pink shaded area. The pink shaded area right here at the top of the chart is 76.05 down to 75.80. So there's about 25 pips there highlighted in the pink zone. Historical resistance high and current support. So if you're looking to go long in the direction of the trend above 75.80, you look to target back to 76, 75, 7700. That's the green shaded area and the highest high that we've seen here on the Australian dollar for quite a long time. The risk in that scenario, of course, is clear. A breakdown of the pink zone starts to look for it to go back down again. We could be looking for it back down here into the 7400s if it breaks down or lower below the pink shaded area. Clearly, the pink zone is your decision zone today. 4-hour time frame, take it on down here to the 4-hour time frame. Clearly, that is your support today. I don't think anybody could argue with that. 76.05 down to 75.80. Underneath that level, we'll look for it to go lower. See the resistance back here, helping us identify support. That's definitely something that you should take into account here if you're trading the Aussie dollar this week. In fact, I think that could be something that we watch for all week long. Green zone, of course, is your resistance target. As we just mentioned, anything above there, we look for the continuation of the uptrend. Definitely watching this pink shaded area as a possible opportunity with low risk and higher potential reward to go long in the direction of the trend. The risk, of course, is the breakdown of 75.80 and the turn back lower again for the Australian dollar. And lastly, moving on over to the NZD/USD, New Zealand dollar versus the US dollar. Last week, we concentrated our efforts on looking for selling opportunities into the blue shaded area at the top of the range. If you did that along with me last week, we had some opportunities to see some profit on a fallback down into the 67.40s, 50s, down into the pink shaded area. I'm very discouraged about going long as long as we're underneath the top of our range. We studied this over the past several weeks in the live trade room. The top of the black box, the red circle, the blue box, the green circle, all of them showing us resistance here into the mid to upper 6800s. I'm very discouraged about going long at the top of this range. Only a breakout above it gives me confidence to go long again. So, or a dip lower. A dip lower, breakout above is when we'll look for it to go long. As long as it's underneath there, I think there's opportunities to go short. So when do we go short? I think obviously the better places to go short are back into the blue zone or underneath the pink zone. If you're looking to go short, those are your two opportunities. Back into the blue zone, maybe even a little bit towards the 68.40-50 level, or underneath the 67.40, 67.50 level, the pink shaded area. That's the places to go long. I don't have any real expectation to go short here. To go long. I'm getting my terms mixed up. Don't go long, only looking to go short here. Don't go long, only looking to go short. No reason to go long. I know we're into support right now, but we're into that major area of resistance on the wider range. So only looking to go short here, not go long. here for the New Zealand dollar. A breakdown, or either a rally back to the blue zone or a breakdown underneath the pink zone would be your opportunity to go short once again here for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.